Mr. Wright.
Well, I do thank you, and I assume you can still see and hear us. Thank you. Lord Sharma, can we, within the broad topic of the CBILS scheme, pick up an issue related to amendments that were required to the scheme, please? And this was early in 2020, and the first topic I'd like to pick up is the amendments that were required in relation to personal guarantees. Is it right that you were receiving feedback from an early stage in the scheme that lenders were demanding personal guarantees even for small loan amounts? And just to put this into context, there had been no requirement that lenders should obtain security for lending up to, I think, £250,000, but they had retained a discretion as to security. So did that develop as an issue?
Yes, it did develop as an issue, and I was receiving sort of feedback from the business community that actually some of the banks were asking for personal guarantees on people's homes, directors' homes. And I had a meeting actually with the head of UK Finance, I believe on the 25th of March, and I raised this issue. And he told me that two of the banks were not requiring any personal guarantees. But I did make the point that this was a unique emergency situation, and we wanted directors fighting tooth and nail to preserve their businesses and therefore preserve jobs. And therefore, I thought that it was not fair that somehow they would also be worrying about the home that they lived in. And frankly, I think it would have been counterproductive if we'd done that. I then had a meeting, I think on the 27th of March with my officials. They told me that 5 of the big banks were already saying no personal guarantees at all. And a submission was put to me, I believe, on the 28th of March, which said no personal guarantees below £250,000 loan. Above that, 20% personal guarantee, and basically the government guarantee covers that sort of remaining 80%. And I said at the time that, in principle, I was very happy with this approach, but what I wanted to ensure was for us to check, one, value for money issues, and secondly, to ensure that this was not going to somehow stop lending from a banking perspective. So my officials then went away to do some work on this.
Okay. So there were two things, really. One was the discretion was being operated variably according to lender. Some lenders were asking for guarantees, others weren't. And also there was this issue about what a personal guarantee meant. And I think we heard some of this from Sir Charles when he gave his evidence as to whether it meant a personal guarantee on somebody's home, which is a particularly personal form of personal guarantee, as opposed to a personal guarantee that excluded the family home. Is that right?
I think that's right. And a part of this, certainly in terms of my view, was formed during the previous financial crisis. I wasn't then a member of parliament, but we were getting close to an election, and I was having conversations with the local business community and business owners in my own constituency, and the same issues were coming up at that point about banks, imposing personal guarantees, basically having a lien over people's homes. I just didn't think that was the right way of going forward if we wanted directors to focus on preserving businesses and jobs.
Right. So your recollection is you sent your officials away, having had the submission from them 27th of March, really to work through those concerns you'd raised. So you're saying, in principle, yes, I think there needs to be a change, but I want to be sure that the lenders were on board and this wasn't going to slow up delivery of loans?
Yes, and also the whole issue of value for money, because obviously if there had been a value for money issue, that would have resulted in a potential direction being required by the accounting officer in my department.
Well, I think that probably puts into a little more context that chronology and what you asked your officials to do, an email I want to put up on the screen and ask you about from Gemma Peck. So this is from the 28th of March, so the day after. Thank you very much. I'll give the INQ just for the transcript. INQ 000563905. So this is to your private office, copied to Alex Chisholm from Gemma Peck. HMT officials have been in touch to say the Chancellor wants to announce 2 changes to CBILS rules on personal guarantees on Monday. I recommend that via private office, SOS, that's you, Secretary of State, push back firmly on this to the Chancellor this morning on the basis that we need more time to properly understand the impacts and prepare the British Business Bank and the banks to operationalise it effectively. So is that because your officials had not yet had time to do the things you'd asked them to do on the 27th?
I don't know. I'm just looking at the timings of this. Okay, so this was on the 28th of the 3rd morning. I don't know precisely. Well, I certainly had a conversation on the 27th. I would be surprised if Gemma hadn't been part of that conversation where I had conveyed my view that in principle I supported this, and then the submission I think came up on the 28th. So I don't think there was any issue of me pushing back on the principle of the changes that we needed to make. But yes, my private office did go back to the Treasury. And I think the aim was, at one point, I think the Chancellor was due to announce this at the end of March. We went to the Treasury. I think they were perfectly reasonable about it. It was actually delayed until the 3rd of the following month. And in the meantime, I had the work had been done on value for money, and I'd had to issue another direction because one of the other changes, but it was very clear that in terms of the changes to personal guarantees, they did not have an impact in terms of value for money.
And so, as you say, not objecting to the principle of the thing, this was about would it actually have unintended consequences taking this step? And would you say then that this was an example of the Treasury and your department working well together in that a policy change was being worked up? Your officials and you had raised concerns, not from a sort of pure policy perspective, but from an operational perspective, an unintended consequence perspective. So things were delayed a few days while that was worked through.
Yes, and I think it shows 2 things. One is that actually there was collaborative working for a lot of the time. But I think secondly, it probably also demonstrates that the sort of the gut feel that the Chancellor had on these issues was, very similar to my gut feel as well, because as I understand it, at the end of the day, he very much supported these changes as well.
Yeah. Can we just look at some other changes, and in particular, the expansion of the eligibility criteria for the scheme? Now, there was a requirement, wasn't there, that if a bank, commercial bank, could offer a loan to a business without utilising the scheme, then that was the route it had to go down, rather than coming under the umbrella of the CBILS scheme with its more favourable terms. Is that right?
Yes, that's right. I think that was the original intention, but I think we very quickly realised that, one, in terms of a level playing field, everyone needed to be able to have access. And secondly, I think particularly in a economic situation which was deteriorating pretty quickly, at the time you may have applied for a commercial loan, it would have been appropriate for you to apply. A little bit later, actually, it may not have been appropriate. So I think it was absolutely the right change to make.
Yeah, because the push or the feedback you were getting, both through business groups and more publicly in the press, was that it had the sense that the more robust a business was, that the more secure a business had been, the more prudent they might have been in the past, they were being deprived access to these loans on more favourable terms than those who who hadn't. Is that right?
Yes, that's right. And of course, there would have been a discussion around what this might have meant in terms of sort of cannibalizing on sort of more commercial lending. But as I just explained, I think, Mr. Wright, the decision was that it made sense from a business preservation perspective that we did this and effectively opened up the scheme.
Yeah. Looking back to when the scheme was first launched, and I appreciate there's a lot of hindsight in all of this, but if you were looking forward to a scheme in the future in a similar emergency, would you still in the future introduce a requirement that if you can get another commercial loan, that's the route you have to go down? Or do you think that that was always a problem in hindsight?
Yeah. So I think you absolutely have to have those iterations in your armory, and we now understand how that worked. But I mean, frankly, it just depends on what kind of emergency we find ourselves in the future. So I don't think what would be sensible and sort of prudent from the perspective of the Exchequer is basically to have literally everything available on day one. I think you iterate. We iterated in the case of the COVID schemes. So I think you would want to think about that as well in terms of a future emergency.
Yeah, because much would depend not only on how severe the emergency was, but its duration, presumably. If it was a short shock, you probably wouldn't need to change that criteria.
I mean, so long as you could see that it was going to be a short shock. I think that's the issue with these things. When COVID first sort of came effectively sort of visible, so to speak, and the impacts of it became visible, I think. And you saw this in the way that the interventions moved. They became, bigger and bigger interventions because we saw that there was a more and more negative impact on the economy. Now, if something similar happened in a future emergency, then I would expect whoever was in government at that point would then act and try and support businesses to the full extent.
And the difference in a future emergency would have been that through the pandemic, you've already worked through those various iterations. You know how they land. You know that these are different levers you can pull at different times if you need to, presumably.
Absolutely right. You know the levers. Hopefully you have tested some of this stuff already. So it is, hopefully in the future, it's more a question of sort of flicking a switch rather than sort of, going into a dark room and trying to work out where the switch is.
I just want to sort of pick up on, you've told us where you were on this policy-wise, but your officials had some more concerns, I think, and I just want to go through some of those. INQ 0, excuse me. INQ 000563918. If we look at paragraph 3, so this is from the 1st of April, we see the Chancellor is strongly in favour of these changes. They're designed to remove what he sees as perverse effects of the current CBILS scheme. Lower risk businesses facing less favourable terms when accessing finance, that's the point we've discussed, and to preempt a spread in financial distress to more businesses as the impact increases. If we go to paragraph 7, we see there, whilst recognising the very valid reasons for widening eligibility and the extraordinary economic circumstances, the pace at which this has been developed leaves us with significant concerns about affordability, value for money, and deliverability. We've strived as far as possible to improve the design of the proposal to mitigate these risks, but significant concerns remain. Just pausing there, I mean, affordability and value for money, you can understand those concerns from officials. What were the deliverability concerns?
Well, I mean, I think from my perspective at the time, I suspect the concern was in terms of changes for the lenders and how they might sort of react to this. But from my perspective, I think this was the right policy intervention to make. And obviously, from a value for money perspective, I had to issue another direction. But, I did that knowing full well that at the end of the day, what we were doing was getting more support to more businesses faster.
Yeah. If we just go to paragraph 29 of this document, page 6, we see there large uncertainties remain around take-up, the default rates of the scheme and the economic benefits, especially around finance additionality. A large proportion of these loans could have happened anyway without this scheme. And they say they haven't been able to provide reliable estimates for value for money. And as such, the figures above are only indicative. And I think at page 10 of this submission, that they also presented an alternative proposal. So this is not adjusting the eligibility criteria of CBILS, but rather widening the availability of a different scheme, the business interruption payments. And so it seems that the Chancellor and yourself, as you've said, seemed aligned that policy-wise, if you could do this, you should. Mm-hmm. But your officials were thinking about other alternatives.
Yeah, so I think, officials were, of course, doing exactly the right thing, which is they were pointing out the risks. They were pointing out, why there effectively may need to be a direction, and they were pointing out alternates. Now, I took the view that we needed to press on with the scheme that we had. Every time you add another intervention, it adds more complexity to the system, and it's no good officials and ministers understanding a policy intent. You need to make sure the people who are delivering it, particularly on the ground as well, and I'm talking about the lenders, are also able to do so. So, that was the basis on which I made the decision that we should proceed.
And is there a danger sometimes that whilst there might be alternatives, so an alternative scheme could be expanded or an alternative scheme could be amended, that in itself can then have unintended consequences and may need further revision, that you knew what you were dealing with CBILS, putting it...
I think it can, but I think it's also right, and I think officials were absolutely doing their duty, if I can put it like this, in pointing out the alternatives to us as ministers. That's what you expect. And then ultimately the decisions are made by the ministers.
And ultimately, I think the way this was resolved was that you were asked for a further ministerial direction, is that right?
Yes, that's correct.
Which is, frankly, what you would have expected to be asked for in this circumstance. Your officials weren't being awkward, they were doing their job.
No, not at all. I mean, throughout the pandemic, I never felt that my officials were anything other than sort of courteous and actually very, very informative and giving me advice in terms of alternatives.
And you gave the direction. And again, I think it's right that we should put up the direction because it sets out your reasoning for giving it. So INQ 0006470, please. And we see there the penultimate paragraph. The overall reason for the proposed changes to the scheme is therefore to mitigate the potential severe economic consequences across the economy, and in the current circumstances, I believe this justifies the immediate introduction to these changes to CBILS. The overwhelming feedback from the business community is that even a few days will make a real difference to many SMEs in getting the support they need. I therefore concur with the Chancellor that in the present circumstances, it is necessary to launch this amended scheme without delay to support businesses struggling to survive from day to day. And then you go on in the next paragraph, which then runs on into the next page. As you note in your communications, the speed at which events have unfolded has not allowed sufficient time for a full value for money assessment to be undertaken, and there remain risks around the ability to deliver at this volume. However, I have confidence in officials to be able to manage down this risk. So, again, are you setting out there, or were you intending to set out there, really, the point you've made before, that it wasn't a question of what were the risks of making this change, it was what were the risks of not making this change, and you had to weigh up where those two sat against each other?
Yes, and those were the difficult decisions that we as ministers had to make in respect of a lot of these schemes. But as I said earlier on, in this hearing, Mr. Wright, that we talk about numbers and sort of pounds and all the rest of it, but of course at the end of the day there's a sort of very human element to all of this, and having seen the Impact film, which I think was very powerful, it set out very clearly firstly where we collectively as government could have done things better, but I think what it also showed is that people appreciated the pace at which some of these interventions were made, and it saved jobs and it saved their businesses.
And those changes were then made. They were announced on the 3rd of April 2020. Can I move on to a slightly different topic then, which is still under the CBILS umbrella, that a backlog of applications started to build up, and that processing times were slow, or became slow, certainly slower than the scheme was designed to have. And I just want to pick up on that, because I think the backlog and the speediness of processing is relevant, isn't it, when we come to look at other things you did? Okay. Now, we know that CBILS was stood up from a pre-existing scheme. Was there a surprise at the sheer volume of applications? If you think about when you were first talking about using the EFG and the state of the pandemic and the economy then, things were moving very quickly. What led to this problem? What caused it?
I don't think, looking back, there was necessarily a sort of thought that, my goodness, we're getting lots of applications. I mean, that was expected. I mean, that's why we were doing this. I think what happened was that the systems were set up for much lower volumes. And earlier in this conversation, Mr. Wright, we talked about how IT systems effectively need to be stood up for volume. Individuals who were doing the processing of these loans within the lenders had to be stood up quickly. And I had many conversations with the lenders. I remember speaking to them basically many times a week. I remember one occasion on a weekend having a conversation with some of the CEOs, and they understood they need to get things stood up quickly, and they were deploying people at the weekend, coming in. I mean, it was an emergency, all hands to pump, but that takes time. And I think that is what caused the issue. And I think the other piece of this, of course, is two other pieces. One is the pace at which lenders were being accredited, and the second is just the number of weeks it took to actually process individual applications. And I think both of those, proved to be challenging in terms of pushing up the number of loans that were being granted every day.
Yeah. And people might have this sense that government can do what it wants, but that in this scheme, the lenders still bore some of the risk. And we should understand perhaps that, is this right, that the government couldn't simply tell banks, lend people money without without doing your proper check?
No, and I saw the evidence that Sir Charles Roxburgh gave, and I agree with him that at the end of the day, banks are private institutions. They have their own fiduciary duties, and therefore, if they are putting capital at risk, they need to be able to do certain checks. Having said all of that, I think everybody wanted the banks to be moving even further and faster. I remember doing a press conference at 10 Downing Street at the start of April, and I made the point very publicly that during the last financial crisis, basically the taxpayer had bailed out the banks, and this was the point at which the banks had to step up and support businesses. And I was very clear about that, and I think many of the banks, kind of did the best they could. But as you said, we were working within certain constraints, not least that we had to have checks done, which took several weeks before a loan could be granted.
Yeah. Many of the banks were doing everything they could. Did you get the impression that others could have done more? Was there a sense of frustration in government on that point, just picking up on it? 2008, there's no doubt that the state had stood behind the banking system and had prevented it from collapsing. 2020, the shoe was on the other foot. As Sir Charles put, I can't remember if it was Sir Charles, but as one witness put it, this time we needed the banks.
Yes, and that was the message that I gave very publicly in that press conference. Frustration, I think, from my perspective, wasn't just about, individual banks. Collectively, as ministers, we could see what was going on in the economy. We were trying to do everything we could, pull every lever we could to get things moving faster, and they weren't moving as fast as we needed them to. Even when we got to a state where people thought the CBILS scheme was sort of operating effectively, we were at a run rate, I think, of about £300 million a day in loans being granted / approved. If you compare that to what happened in the first weeks of the Bounce Back Loan Scheme, where we had over 268,000 bounce back loans approved, and I think over 8 million, I think 8.4 billion pounds approved going out of the door just in the first week, it gives you some idea of the frustration that there was in the business community, and obviously, that was something that we felt as well.
Do you think, the corporate statement of your former department puts it in this way, that there was a lack of understanding, generally, of the limited capacity that lenders had to handle such a large volume of requests in a short time frame? So if you compare and contrast, except in their commercial institutions that lend for their business, but if you compared and contrasted volume in normal times to CBILS, there were bound to be acute pressures on their ability to do the processing.
There were, and obviously, now we have a better understanding, and that's why the idea of having this sort of suite of measures which are then regularly stress tested with the lending institutions is very important. But at the time, I think, I remember having calls with, banking industry leaders and saying, what more can we do as ministers, as business, to speed this thing up? But, it still took time because you needed to get the processes to be able to deal with the volume put in place.
Yeah. Now, in terms of what you could do, that there were, by that stage, perhaps when CBILS was the only show in town in terms of loans, limited things you could do. One was just encourage industry to do more. Well, you were doing that. You could also encourage what? An increase in the number of accredited lenders? So getting the British Business Bank to enrol more lenders into the scheme, and were you doing that?
Yes, we were doing that, and I think in the end we ended up with I think 118 accredited lenders for CBILS. We were doing that, but that process itself took time. And I think some of the evidence you've heard from the folks who were sort of leading the British Business Bank at the time will tell you that they tried to truncate their processes, but at the end of the day, what I don't think they were prepared to do, and I understand absolutely, is some sort of automated process of accreditation. They need to do their homework, and that took time.
So you're talking about the British Business Bank as an institution that is resourced for ordinary times, commercial banks that are resourced for ordinary times, and
and these were extraordinary times.
Yeah, and these may be, or they may be, the EFG may have been a relatively high volume platform, but high volume as compared to the volume in COVID.
Absolutely.
Yeah. Okay. Apart from doing those things, retaining the core components of CBILS, was there anything else you could do to get things moving more quickly, other than encouragement and accrediting more lenders?
Well, I think this is the point at which, the thinking turned to what else we could do in terms of, other schemes. And as part of my business engagement and talking to the business representative organisations, I think there were at least two meetings, I think on the 15th and the 21st, where they started raising the issue of 100% guarantees, comparing them more favourably to CBILS, and also then pointing out that certain other European nations did have such instruments in place, and isn't that something that we as government ought to be exploring? So the whole sort of thinking around bounce back loans and require them was also something that the business community absolutely wanted to do.
And I just want to pick up on that. Your engagement with business was continuing all this time. And
absolutely.
What was the message coming through about liquidity in business?
So I think the business community and the representative organisations were extremely grateful for what the government was doing. But I think, every time we did something, the situation worsened, and quite rightly, they then said, well, okay, now we need to go a bit further. Actually, in some cases, a lot further, and things haven't been solved for many of our members. They are still feeling, a real pinch, and are in distress. And I think that message came particularly from the organisations representing small businesses.
Okay. We will shortly pick up bounce back loans. We've set the background there to how the bounce back loan scheme came to be thought about and ultimately was devised. Just want to pick up two other things before we do that. First, on CBILS, to sort of complete the piece on adjustments. Initially, charities and further education colleges were excluded from the scheme. On the 17th of April 2020, so a bit less than a month after the scheme was established, your officials sought approval from you to extend the scheme to allow charities and further education colleges access regardless of their level of trading activity, and those changes were made. Is that right?
Yes, that's right.
And just, this is really a looking forward point. That was obviously a gap in the scheme that perhaps hadn't been thought about in the rush to stand it up. But going forwards, did you think that was a sensible step, and do you think that learning has been banked in terms of access to schemes in the future?
Well, I certainly think it was a sensible step at the time, and I hope that is banked in terms of future schemes. And one thing I would say is that I know the current business department has been looking at sort of draft schemes, and I hope that those draft schemes are also discussed with some of the organisations or sectors that might benefit from them in the future, just to make sure that everyone has a shared view in terms of the level of support and who needs to get it.
Okay, thank you. So before we get to bounce back loans, can we go up the other way to large business interruption scheme? So CL bills. So this is not looking down at the SMEs who were being excluded from C bills, but looking at the other side of this. Is it right that you were picking up fairly quickly from your engagement with business groups calls and requests for additional support for the bigger companies?
Yes, we were, and I think this is what was described as the missing middle. These were businesses that weren't able to get the support we'd put out so far because they had a turnover over £45 million, but also they weren't large enough or weren't investment grade to be able to get access to the CCFF facility as well. And the reason I think it was so important to support this group is because collectively, I was told this was about 5,000 businesses representing 20% of corporate turnover in the UK and around 20% of employment. And that's why it was really important that we put in place a scheme that they could also take advantage of.
Yeah, I think the figures, just to assist you, were and almost exactly right. 21% of turnover and 20% of employment of all UK incorporated firms. 10% of these were publicly listed companies. So we're talking about big names,
Absolutely.
big employers, big firms, and they weren't quite big enough to get into the CCFF that the Bank of England was administering directly with the Treasury, and they were too big for C-bills, yes. And so that's why they became described as the missing middle. And so that emerged fairly early. I think you had a meeting on the 27th of March of 2020 with business groups, and this problem emerged at that meeting, certainly. Was that really, I mean, thinking back, I know it's difficult to know exactly when something was raised for the first time, but is that about the time that it was emerging as a problem?
Yes, I mean, I think this will have been an issue that would have percolated up through those meetings. I mean, those meetings were taking place at least twice a week, and on some occasions I would speak to the 5 largest business representative organisations, separately as well. So I think this was something that was percolating, and we knew we had to act. And
there was action taken speedily to work up the large business interruption scheme, is that right? Which
yes, that's right.
Built again on this architecture that existed, but appealed to these larger businesses. I'm not going to go back over questions about speed of delivery. Was this another one of these situations where it was balancing action versus inaction? We either moved quickly or we risked these companies falling over?
Yes, I think it was exactly that. And of course, we had to think very carefully about, what was the delivery vehicle for this. And, realistically, I think the only game in town, so to speak, was the British Business Bank. But I was also concerned that we had already asked them to do a whole lot more than they had sort of been equipped for in peacetime. And they were used to dealing with the smaller end of the market. And I recall at the beginning of April, I specifically asked my officials to test whether or not the BBB had both the capability to put this scheme in place, but then also the resources. And the answer I got back a few days later is that is the case. They do have those capabilities and resources in place. And again, as happened a number of times, I had to issue a direction for this particular scheme as well. And I think if the capacity of the British Business Bank had been a particular issue, I suspect it would have been raised with me in the letter from my accounting officer asking for a direction.
Just picking up on that, though, in terms of the British Business Bank's ability to operationally deliver, we've just been in questions about CBILS, discussing the pressure that was put on the bank, for example, in terms of accrediting new lenders under CBILS. You know, it had its cohort of staff that was not an emergency cohort, it was pre-existing. Making the bank responsible for this scheme was bound to increase the operational pressure, wasn't it?
Yes, it was, and that's precisely why I asked that question at the beginning of April, because, look, everyone was under pressure at that time, but I wanted to make sure that if they required anything extra from government, we needed to see whether we could make that available. Now, as I understand, the BBB did shift resources around themselves, and that will have helped. But ultimately, the assurance I got is that this is something that the BBB could take on, and they did.
And again, you made that decision, but was there any alternative? I mean, sometimes you can make a decision against a number of policy options, but what was the alternative way of reaching that missing middle?
I don't think, Mr. Wright, that there was an alternative way of reaching that missing middle. I mean, we'd set up CBILS, and I think it was natural, as you were looking at the business ecosystem, to kind of sort of base it on where we'd started, and then effectively sort of look up, as you say, rather than look down, and that's what we did. I mean, you yourself have said a number of times during our conversation, just how truncated the timelines were. And that's why we had to put in place the scheme based on what literally we had done with an earlier scheme.
It's right, I think, that on the 9th of April, the Treasury contacted your private office to say that the Chancellor wanted to make 2 changes to CL bills. Is that right?
Yes.
First, to make it available to all viable businesses affected by COVID-19, and secondly, to remove the turnover cap, which had been 500 million. So there was still an eligibility criteria at the top end. If you turned over more than 500 million, you couldn't access the scheme. And the Chancellor wanted to remove that, which would, it was estimated, enable 3,000 businesses rather than 2,600 to
yes, that's right,
potentially access the scheme. But it's right, isn't it, that you raised questions and queries about those proposals, those proposed changes?
Yes, I mean, I whenever something was put in front of me, I had a sort of a pretty good look over it and raise the issues and ask the questions. And it was on the basis of that I would agree to a policy change being made.
And were you in favour, ultimately, of making those changes to extend support?
Yeah, I mean, at the end of the day, this was about getting as much support to as large a cohort of businesses as possible. And I think that's what we did with frankly, all of these schemes put together.
But I think that the acting permanent secretary, Sam Beckett, did write to you asking for a ministerial direction. Is that right?
Yes.
And I'll just have that put up on the screen, please. INQ 000563960. If we could just go to the next page, please. Sorry, next page. There we are. Yeah. So this was setting out that the lack of a portfolio cap means the government's total exposure is proportionately higher under CL bills than under C bills. So there's a higher level of risk, not just in terms of the sums involved, but also because of the adjustment to the cap. Is that right?
I think that is right from a sort of theoretical perspective, so to speak. But I think it's also the case that we were dealing here with big companies, actually significantly bigger companies than under CBILS and obviously under bounce back loans. And therefore, the risk of potential default was obviously, significantly lower. And so it's proved to be the case. If you look at the numbers in terms of credit losses or fraud losses, really pretty minuscule when it comes to CLBILS.
So actually, the higher up the chain in terms of the size of the companies, the lower the losses. We've heard some evidence that, for example, the CCFF, 0 losses.
Yeah.
Yeah, okay.
And that's logical, I think.
And next page, please, of that document. It's just that bottom paragraph, really. This is coming from your official to you. To sum up, the potential for economic damage created by the coronavirus pandemic creates a strong case for government intervention. My assessment is that risks around regularity, propriety and feasibility are manageable. Mm-hmm. However, the uncertainty around value for money and risks regarding additionality of the proposed scheme means that managing public money requires that I ask for a written direction. And I just put that up because that's, I don't know if this is the right way of describing it, but it's softer language than we've seen in some other requests for ministerial directions. In other words, your officials saying, look, it appears to be saying, absolutely agree that there is a need to take this action, but the reason I'm seeking this direction is because I can't, as the accounting officer, tick off all the things I'd normally have to.
I think it's right. If you look at all the directions that I issued, they are always prefaced in terms of the request for a direction from my permanent secretaries. I had 3 during that time. They are all very sympathetic about why we are introducing these particular measures and the need for the measures. And I always felt that all 3 of those permanent secretaries, really understood the impact on business. But obviously, they had to fulfil their duties in terms of managing public money, and that's why they required me to give a direction.
Thank you. Just one final thing to pick up on CLBILS, and then we'll turn to look at the SME bounce back loan scheme. Uptake, as we understand it, for CLBILS was lower than that of CBILS, and you may be able to explain simply why that is, and it may be quite obvious.
Well, my conclusion is there was a relatively small universe of companies that we were talking about. I think in the end, and I'm sure you'll correct me if I'm wrong, but there were 753 loans that were approved under CLBILS. And originally, when we started this process, I was told, we were looking at a universe of around 5,000. You've talked about the 3,000 number as well. So, in a way, it's not surprising that far fewer loans were given to this cohort of businesses. But nevertheless, I think the impact they made was incredibly important in terms of preserving jobs. And you see that in the British Business Bank's analysis in terms of gross value added, and also in terms of the benefit to cost ratio, which was actually really pretty high in terms of CLBILS.
If there isn't funding available to an SME that employs 10 people and they lose their jobs, that's a tragedy for all of them and for the business. But we're talking here about businesses that might employ tens of thousands of people.
That's absolutely right. And also, I think there is a sort of knock-on effect in terms of the economy. I mean, frankly, whether you are a small business, a medium-sized business, or a large business, you have suppliers, you have customers. If you fail, that is an issue that cascades throughout the economy in a negative way. And clearly, that cascading in a negative way is far bigger if it is a big business that goes down.
And you mentioned very early in your evidence that this was supply side shock, and the supply chain was disrupted, the global supply chain. But within the United Kingdom, if one business fails, that can have an impact on supply of components and so on. And so, is that what you mean by the amplification of the effects?
Yes, absolutely. I mean, if a business fails and the suppliers have no one to supply to, that clearly has an impact on the suppliers. So, we were facing both a sort of a global hit to our economy, but then also the challenge of making sure that we were preserving what we had in our country, where businesses were just trading, internally, so to speak.
Okay. Right. Thank you very much. Let's move on, please, to the bounce back loan scheme as it became known. And I'll just, as I have with other schemes, just set out a bit of the context so that we all know, those watching the proceedings know what we're talking about. So this was announced on the 27th of April 2020, opened to applications on the 4th of May of 2020, closed finally on the 31st of March of 2021. It was initially going to be called the Coronavirus Small Business Interruption Loan Scheme, so that's really another iteration of the CBILS type name, but it became known as the Bounce Back Loan Scheme. And the rationale, as we understand it, and this is set out in various statements, I'm drawing it from those statements, is this was responding to concerns raised by the business community that CBILS was not doing enough at pace for small and medium-sized enterprises. And we've discussed, haven't we, Lord Sharma, the delays that have built up, the backlog. So this was about quick access to cash for small businesses, essentially.
Yeah, this was absolutely about quick access to cash. And if you are a sort of small business, I think taking weeks to get and process an application, obviously is challenging. And I think we saw this in the Impact film, where some of the advantages that those who spoke in it talked about was its simplicity and speed of access.
And we'll come on to look at this in more detail. Do you accept from the outset that achieving simplicity and speed meant trade-offs in other ways?
It absolutely meant trade-offs. And I remember the first time this came to me was actually on the 21st of April, and then a subsequent follow-up submission from officials on the 23rd. And I went through this, and I had a meeting on the morning of the 24th of April with my officials around this, and it was very clear that self-certification was going to present a potential risk to the Exchequer. And I said at the time, we really have to work through this and see what we can do in terms of understanding the risk and then potentially mitigating it. We spoke about my colleague Gemma Peck, who I thought did a very good job with these schemes. She then, on the 24th, in conjunction with the BBB and HM Treasury, contacted Pricewaterhouse, or PwC as it's now called, and asked them to put together basically a risk report, fraud risk report, about how we might mitigate some of the challenges that we were facing if this was self-certification, and we wanted money out of the door, within 24 hours.
And it wasn't just self-certification, was it? The other key change to other schemes was that the government was providing that 100% guarantee.
Absolutely. The government was providing the 100% guarantee. And, just going back to the earlier discussion on CBILS, I wasn't part of this discussion, but as I've understood it, the Chancellor spoke on the weekend of the 18th and 19th. I have this from Mr. Bierman's statement. He spoke to the some of the biggest lenders over that weekend, and the proposition was put forward about speed and self-certification. And I think they already at that point were indicating that if that was going to be the case and they couldn't do any prepayment checks, then actually they would require a 100% guarantee.
And I asked you about this earlier in terms of whether the banks were stepping up essentially, and you said in your answer, well, they're commercial institutions and they will do the checks that they think they have to do. But if the government's backing the loan to 100%, it's not a question that you're mandating that they mustn't, well, you are mandating they mustn't do checks, but there isn't any risk in them not doing so to them. That's the point, really.
Well, so I think, in the end, we did settle on some sort of basic checks being done on KYC and anti-money laundering that were, I think the BBB were rightly keen to make sure were in place. And then, of course, the banks were required for a sort of year after the loan was due to sort of continue to sort of pursue this. So I don't think it was sort of entirely an issue of the banks having this, but you're absolutely right. I mean, if you give a 100% guarantee, you do that with your eyes open as government ministers.
And lest it be thought that the commercial banks were running a sort of charitable endeavour here. I mean, you were really, by standing up this scheme, weren't you saying to commercial lenders, if you want access to this market, so if you want access to these hundreds of thousands of loans that are going to be issued, and to make the profit that will come from those loans, then you're going to have to modify your processes and deliver quickly.
Yes, and I think, as I said earlier on, Mr. Wright, I mean, from our perspective as ministers, the aim was to get help as quickly as possible to businesses. And again, you go back to this point, sorry to sort of bore on this, but the risk of inaction was going to be far greater than the risk of taking action. And frankly, so it's sort of proved to be the case, actually.
And just picking up on that, the risks were all known. I mean, your department could see the risks. It wasn't a question of going into this blind and then realising afterwards, crumbs, it's all gone wrong and there's all this money that we've given out. No.
Absolutely not. I was fully aware of the risks. The Chancellor was fully aware of the risks. And in fact, having raised this whole issue on the morning of the 24th of April with my officials that we need to do more work on this, as I said, PwC were put together this report. And I remember a letter I wrote to the Chancellor on the 24th of April where I set out very clearly that by having self-certification, there was going to be a risk to the Exchequer, and we needed to be sort of fully aware of that and take sort of proportionate action, I think was the exact phrase. And then I wrote again to him on the 30th of April, setting out very clearly that we needed to review the findings of the PwC report in formulating the final policy design on bounce-back loans. I received on the morning of the 1st of April the report. It was a number of pages. They set out actually the risks that I had already been told via my department, but also the British Business Bank. And I think that was right and proper that piece of work was done. But what we didn't have in that report was a list of concrete mitigations against the risks that had been identified that could be put in place literally within a day or two. And I never saw anyone put forward in front of me a list of mitigations that could be put in place literally immediately in terms of the risks that had been identified on bounce-back loans. So you're absolutely right. We went into this with our eyes open, understood there were going to be risks. We went forward, but that wasn't the end of it. Obviously, there was then work done subsequently in putting some of the risk mitigation measures into place.
Just in fairness to you, what your letter I don't think it's been highlighted, so I can't put it up on the screen, but I'll just read what your letter to the Chancellor of the 24th of April said. It said, "We need to recognise the additional risks to the Exchequer that would result from a full guarantee and the absence of credit checking by lenders, and should ensure we take proportionate decisions on eligibility and measures to guard against fraud." That's the letter you were speaking to.
That's right, yes.
And in terms of mitigations, I just want to pick up on that. And just see if you'll accept it being put slightly differently, which is there were mitigations that you could have put in place within a day or two at the outset of the scheme, but all of the mitigations that you could conceive at the outset were ones that would have defeated the objective of getting the money out quickly.
Well, we would have been back to a CBILS type scheme. I mean, the whole point of this was to get money out of the door, within 24 hours. And the reason we had decided we needed this scheme is because the CBILS scheme wasn't delivering, for that end of the market.
Precisely. So the mitigations you could put in place would defeat the whole purpose of what you were trying to do.
Yes.
Yeah. Just one final point about this decision to implement at pace. Why couldn't? Did you understand why CBILS architecture couldn't be changed at sufficient pace to get round these problems, or was it just beyond the capability of that scheme?
No. Well, I think if lenders need to do a range of checks, that takes time. I think the second issue was that obviously they had to have regard to the Consumer Credit Act 1974, which we disapplied in the case of the bounce back loan schemes, and basically the CCA means that there is a particular duty on the part of lenders to do risk assessments on borrowers, particularly at the sort of lower end of the market, below £25,000. So all of that architecture was in place. What we did with bounce back loans was effectively to remove some of those constraints, and that's what allowed us to put money out quickly. And I just want to pick up on this point about mitigations, Mr. Wright, because there were risks that were clearly identified going into that scheme. And I'll give you one example, which is the risk that one individual company could make multiple applications to different lenders, basically on a sort of fraudulent basis. This was recognised. The British Business Bank stood up a fraud working group. Right from the start. The scheme was launched on the 4th. On the 6th, I think they had their first meeting. It involved the Cabinet Office and I think my department and others. And CFAS, the industry sort of credit body which looks to alleviate fraud risk, they put forward a proposal to have a database. Now, these are the experts. I think you've had COEX, or Mr. Cheeseman was on earlier, obviously leading this work. Even they, having met and this being raised on the 6th of May, and for them meeting every week, and obviously then having those discussions, it still took until the 3rd of June for the beta version of this database to emerge. Subsequently, and it was adopted voluntarily, and I then eventually, sort of when it was put to me, said that it should be mandatory. But the point here is that it took a month for just the beta version of one of these checks to emerge. If we had waited a month before introducing bounce back loans, the economy would have been in a pretty dire place, certainly even more dire than it was. And a lot of businesses would have gone down in the meantime. We couldn't afford for that to happen.
Well, I asked Mr. Bearman about that yesterday when he spoke from the bank, and his evidence was, and I asked him the same question, if you could do this by June, why didn't you do it earlier? And his answer was, we were talking about multiple data points,
yes.
A spreadsheet that had to be devised, multiple lenders who had to be plumbed into that spreadsheet, and this was as quick as CFAS could work it up with the industry. So does this go back to one of those very first points that you made, which is this is about weighing up the cost of action against the cost of inaction, and what would have happened if you didn't act quickly?
Yes, that is exactly the point with this. But I mean, I think the positive thing is that that particular measure came in place. There were measures, checks on businesses incorporated after the 1st of March, new directors being appointed after May 2020, the turnover check. All of that came into place, and it took. Some of them took months, and one can have a discussion whether actually they should have come in earlier, but even if they'd come in earlier, they couldn't have come in kind of almost immediately, and that's why we proceeded. I mean, the positive thing is that those checks are now there, so in future, if we face a similar situation, at least we can have a product where those kind of, what some people might think are basic checks are already in place, and they don't impede the speed at which money goes out the door to support businesses.
We heard from Mr. Cheeseman this morning, and he expressed some frustration, I think is how he put it, at times with your department. He felt things weren't moving quickly enough on fraud. But I just want to, in that vein, pick this up, because he also dealt with the capability you had as a department before the pandemic. Now, he told us that 84% of fraud specialists are within HMRC. Unsurprising, perhaps. But so far as your department was concerned, I mean, you hadn't really been in it as Secretary of State pre-pandemic, but generally speaking, BEIS in ordinary times would you agree, was more of a policy department than it was a delivery department? It wasn't delivering large-scale support directly.
No, I think that's right. I mean, we had lots of arm's length bodies that were doing the work, but you're right. We were sort of primarily a policy department. Just on picking up on this point that Mr. Cheeseman raised, I mean, in the autumn of 2020, it was put to me that there were certain things that we ought to do to beef up our fraud capabilities. And I remember at the time saying, I got a set of proposals from the officials, and I said, no, this isn't enough. We need to do more. There were other risks that were emerging. And as a result of that, and my asking for it to happen, we increased the number of counter-fraud experts, I think from 2 till 10. I asked for more money from the department to go to help the National Investigation Service, which of course was dealing with sort of major fraud. I asked for nudge letters to be put in place, to be sent from a recovery perspective to borrowers. And we also looked at issues around whether or not we ought to have some kind of deterrent communication to basically put off potential fraudsters. And I think at the time we concluded, let's get all the other measures in place first. Now, I was the Secretary of State, so of course I take responsibility for everything that happened in that department during that time. But on a personal level, when it was put to me that we didn't have the right capability, I asked for more. And I think if that message has been relayed to me by way of submission, earlier, I'm pretty sure I would have concluded at that point, yes, we need to get on and beef up the capabilities we've got.
And in fairness to the department, Mr. Cheeseman spoke of cooperation and collaborative working, and he just said he was slightly frustrated. Lord Agnew, on the other hand, who had a ministerial portfolio, has provided evidence to the inquiry. He might be said seem to have been a little bit more vexed than Mr. Cheeseman. But leaving aside his,
I've read his
own views.
Yes.
I mean, do you think they're fair criticisms?
Well, I would describe Lord Agnew's submission as pithy. I don't think they are fair. I mean, I can't speak for what happened after I left. So there may be elements of it that are perfectly fair and reasonable. But my department did work closely with the Cabinet Office and with COEX. And I'll give you one example. When we were looking at changes on turnover, for instance, and this was sort of, I think this issue first came up in November, and we can have a discussion about why it came up then. But anyway, submission came up asking for me to agree that there could be turnover checks on businesses, because obviously, someone may misdeclare the turnover and get a bigger loan as a result. There should be checks by checking against information from Companies House and HMRC, the Treasury was not sort of keen on this, because I think they felt that this might sort of slow things down. But nevertheless, in cooperation with my department and COEX and Mr. Cheeseman's sort of team, they came up with a solution which meant that there could be checks for what were assessed to be high-risk lenders against a sort of specialist HMRC team, which the Treasury supported. So, I mean, that's just one example of the department working together with the Cabinet Office, and obviously they sat on some of these groups which were looking at the sort of counter fraud. And one of the other things that I asked for very clearly in October was that we should have a roundtable. We should sit together with the Cabinet Office, with the Treasury, with the lenders. I think I asked for that on the 16th of October. That meeting took place as a roundtable on the 2nd of November. And coming out of that, UK Finance provided a bunch of recommendations, which I think came forward on the 16th of November. And that then ultimately led, I think by the end of the year, to a MOU, a Memorandum of Understanding, of working more closely together between the Cabinet Office and BEIS. So I don't accept that somehow we were aloof and not working together. Yes, absolutely, we could have improved what we did at the time, and the lessons to be learned. But I don't accept that somehow my department was not prepared to work with other parts of government, to try and fix the issue on fraud.
Okay, thank you very much. I think that takes us, my lady, to time for the afternoon break. Sorry, we can't hear your ladyship in the hearing room, I'm afraid.
That's because I didn't unmute myself. You should have learned by now. I shall return at 20 past. Mr. Wright.
Thank you, my lady, and I'll assume you can still see and hear us. Thank you. Lord Sharma, I don't want to cut short your evidence on bounce-back loans at all, but there is obviously other ground I need to cover. What I would like to do, if it's all right with you, is just pick up on a few discrete points, and then I'll give you an opportunity to, under the heading of loan schemes, just share any overall reflections. Then we'll move on to look at grants with the remaining time.
Sure.
So I just want to ask, really, first thing about bounce-back loans. The British Business Bank issued a reservation notice, we understand, and that was the first time the bank had taken that step. Is it fair to say that you and your officials were slightly surprised by that they issued a reservation notice?
We were surprised, and the reservation notice came, well, I was informed of it by my private office on the afternoon of the 2nd of May. This was less than 48 hours before the launch of the scheme, which obviously the Chancellor had already announced was going to be launched on the 4th of May. We took it very seriously because, obviously the British Business Bank board, if they're putting forward a reservation notice, that is something that every Secretary of State and Permanent Secretary has to look at very carefully. I discussed it with my team, and having been through it, I concluded at the time that they were absolutely right to highlight these risks once again before we made a final decision. But there was nothing in the reservation notice that was new either in terms of the risks or, frankly, in terms of solutions to the risks, in terms of mitigating them very quickly. I therefore asked my then Permanent Secretary to write to the British Business Bank and ask them to proceed with the scheme, which they did do. But I completely understand and respect why they felt the need to do so at that time.
All right, thank you. Second thing I want to ask about is really to test a proposition that another witness, Dr. Loynig, who was a Treasury advisor, has made, just to see how this lands with you. And this is a recommendation about publishing at the outset a list of those who apply for loans and grants as a transparency measure and also as an anti-fraud measure, so that it can be seen which companies are applying. How does that sit with you?
Well, practically, I think there were 1.5 million bounce back loans that were issued in the end. I do wonder whether publishing. I mean, I don't know what the intention is. Whether the aim is to publish this sort of in real time, and what is the system that you would do this on. And of course there are sort of confidentiality issues as well around that, because that may have unintended consequences as well by putting this information into the public domain. So it's worth considering, I guess. But I think for me, what is more important is to make sure that you have mitigation measures in place in your suite of products that you may deploy in the future. That, I think, should be the sort of the first point in terms of your armory. And then, of course, you could think about publishing this stuff. But I'm not a sort of an expert on the implications of putting that sort of information out there. But you could consider it. It would be a very, very big database, very, very quickly.
All right, thank you. Another issue I want to test with you and see what your view is. The 100% guarantee element of bounce back loans was one of the high risk elements of it. In a future emergency, do you think that the ability of the bank, British Business Bank, or by whatever mechanism, government to stand behind 100% guaranteed loans should remain? Or do you think they are essentially very much a matter of last resort, from your experience?
Well, they are a matter of last resort, but they absolutely need to be in the suite of products that you have.
Okay, thank you. You've spoken about the overall cost-benefit analysis of all of the loan schemes. Just to give bit of context, that estimate that over a million jobs would have been lost in the second year of the pandemic without those schemes. CBILS and CLBILS and bank-backed loan scheme borrowers had between 7.9 and 12% higher employment than they would have in the absence of the schemes. So those are some of the stats. The statistics, rather, I shouldn't use an abbreviation, around them. But does that again underscore this point you've made, that this is about calculating the impact of what you did do as against the potential cost of what you didn't do?
Yes, it is. And I think, since we are trading statistics, I think there's another one which is out there, I think from Ipsos, talking about 175 to 618,000 businesses effectively supported and saved through the bounce back loan scheme. And Mr. Wright, we didn't do everything right during our interventions, and I obviously look forward to seeing the recommendations that come out of this inquiry. But I do think we got the big calls right, and I do think as a result of that, we were able to have a really positive impact in terms of saving hundreds of thousands of jobs and hundreds of thousands of businesses. And I think that's really important to remember. Whenever we talk about what didn't go right or could have gone better in terms of our interventions.
Those are the questions I wanted to cover under the heading of loans. Other than the points you've already made and underlined, are there any other lessons learned or reflections for the future beyond those you've already given in terms of loans?
No, I think we've had a pretty full exchange on this.
Okay, thank you. The Future Fund, I just really want to take this very shortly because I want to get on to grants, really as a topic. But looking at the Future Fund, which was another convertible loan scheme, so not a traditional loan, a convertible loan scheme. Is this fair that you and your officials were not? I say not. You weren't not in favour of it, but you preferred other measures, and in particular, tax measures rather than a new British Business Bank administered fund.
Yes, I think that's fair. I had a meeting with my ministerial team and some of the officials, and we thought the most efficient way of doing this, and actually to basically release private money, was through further sort of tax incentives on EIS and SEIS schemes. In the end, we did actually get there, and the Future Fund they were eligible for the Future Fund. That needed a change in the Finance Act 2020, which happened. The Chancellor, I think, came forward and wanted to do the Future Fund scheme. I think it was based on a scheme that had already been launched in France. And I think quite early on, I was supportive of it. I mean, it sort of made sense to do this, but we weren't letting go of the wish to also allow the tax incentive piece to be deployed, and it was in the end.
Okay, thank you. Can we move on then to business grant schemes? So these are grants delivered under 3 cohorts of grants to businesses in England, because other devolved administrations had their own schemes. So I'm going to concentrate on the English schemes delivered through 314 local authorities. And just to give a bit of context, 3 cohorts of schemes. Cohort 1, during the first lockdown, Small Business Grant Fund, Retail, Hospitality and Leisure Grant Fund, Local Authority Discretionary Grant Fund. Cohort 2, between September 2020 and March 2022, Local Restrictions Support Grant, Additional Restrictions Grant and Christmas Support Payment. And there was a third cohort running from April 21 to March 22, but we'll deal with that light touch because you had moved to a different responsibility from, I think, February of 2021.
I think January the 9th.
January the 9th of 2021.
Yes.
So we just note that, but
sure.
you had left the department. And again, just to put all this into context and set the scene, 8 schemes, therefore, to support business, 4,529,000 payments made under the schemes, total of £22.6 billion paid out by 314 local authorities, benefiting, it is estimated, 1.4 million businesses, including the smallest businesses that were expected to face the most significant disruption. That is all taken from your department's corporate statement to set the context. Now, your department was the department with accounting officer responsibility.
It was.
Because these were grants supporting business.
Yes.
And you're the Department of Business. But the Ministry of Housing, Communities and Local Government is the department that has the well-established relationship with local authorities. Is that right?
That is correct. But of course you're also right in the point that the reason the accounting officer responsibility, it was discussed between the 2 permanent secretaries in my department and obviously MHCLG, was ultimately because the policy responsibility rested with the business department.
Yeah. And I think what happened is that because the Ministry of Housing, Communities, Local Government had an established payment system for local authorities, because it was responsible for funding local authorities or giving local authorities their funding. They delivered the funding to the local authorities until your department was able to stand up its own payment function later in 2020.
Yeah, I mean, it was, as I understand, I'm happy to be sort of corrected on this, but ultimately the money practically went out of the door from MHCLG to the local authorities rather than directly from BEIS.
Okay. And then there was also involved in delivery of these grants the Cities and Local Growth Unit, is that right? Which was a joint unit between your department and MHCLG, involved in delivering the schemes via local authorities.
Yes, that's absolutely right.
Did you feel that there was a clearly defined division of role and responsibility between those three different entities?
Yes, I think that there was actually a very clearly defined. We had, the business department had accounting officer responsibility and, therefore sort of overall sort of control, I guess, is one way of putting it, over what was going on in terms of producing the guidance, in terms of the interactions we did with the local authorities. The unit that you have described is obviously a joint unit between the two departments, and that was actually led by a senior official in BEIS. So I think there was a, from my point of view at least, there was a very clear understanding of who was to do what.
Yeah. The corporate statement of the department suggested that there was at least the potential for a lack of oversight, in that each department could assume the other was having oversight. Did you find any evidence of that yourself? I mean, accepting that you'd left in January 2021.
Yeah. No, look, I think during the time that these schemes, and I primarily just talk about the sort of cohort 1 schemes, as they were launched and as they were monitored, that was something that we did. I mean, clearly, the returns that came from local authorities would have come in through MHCLG, but I certainly didn't feel that there was a lack of oversight, and I do think, Mr. Wright, that team, actually led by Jenny Dibden, did a sort of heroic job in very challenging circumstances and in time constraints, ensuring that local authorities got a lot of money out within the first month of the schemes.
Now, we know from evidence the inquiries received that in the first cohort, the Local Government Association and local authorities were not consulted in the design of the schemes. And you may not have heard it, so I'll tell you what Joanna Killian, the Chief Executive of the Local Government Association, gave evidence about last week. She said that the principle must be that local government is involved in design, and that sort of design should be happening now, was her view. This is looking ahead. I think had we been involved slightly earlier on in some of the programmes, I think we could have tailored impact, and that would have relieved some of the worst aspects of the pandemic. Other government departments should invest time and energy and logic, actually, to understand local government. And her criticism, such as it was of the department, was that BEIS saw us as a sort of delivery arm, like we were a contractor almost. They didn't understand the complexity of our business. They didn't understand the local environment. They didn't understand our powers, and that became a real sort of frustration. And she went on, there was great disappointment about the fact there'd been no sort of involvement or engagement in design. We weren't encouraged to be part of the design process. And I just want to pick this up because I asked, I've asked other witnesses about it. MHCLG is in effect the sponsoring department for local authorities, and therefore has these well-established networks of engagement with local authorities, and it might be said understands them and can speak for them. And I just wonder, therefore, why they weren't the department that was responsible for delivery and given responsibility, because they had all of these frameworks and they had these ins to local authorities and could have involved them in design better than your department, which isn't necessarily a criticism of your department, it's just how things sat.
Yes. So, I mean, I think there are 2 points here, is whether or not whoever whichever had been the delivery department, where could they have got the local authorities involved with these particular Cohort 1 schemes. And, the first of these schemes was announced as part of the budget on the 11th of March. I was first informed of what was going to be in the budget on the 10th of March. So it wasn't, frankly, as if, Mr. Wright, we in the business department had a full understanding of what was coming down the line. And this goes back to the point I raised right at the start about a sort of governance framework. If we had been part of those discussions, even a week earlier, we could have offline had some of those conversations with the LGA. As it happens, when on the 11th this was announced, I was very keen to talk to the LGA leaders. We did collaborate with them, and working with them, we stood up, as I mentioned earlier, this group of 20 representative local authorities, which then, gave us advice, helped us on issues relating to guidance. But I think it's fair to say that they weren't involved at the start in terms of designing the scheme. Certainly looking forward, in terms of potential interventions that may come as part of that sort of suite of products, then of course the local authorities should be involved. So I accept they weren't in this case, but certainly through the engagement we did with the Local Government Association, with those 20 local authorities, and also, I had calls with local authority chief executives. My ministerial team had conversations with individual local authorities. In fact, the minister who led on all of this, Paul Scully, very good minister, he was someone who used to be a councillor before he became a member of parliament. So he understood, that world of local authorities, and I think he was very sensitive in the way he dealt with them. So it wasn't perfect by any means, but I do think, given what we had, we did kind of the best that we could.
Dealing with the budget point, and just again give you an opportunity to comment on this, Joanna Killian's evidence about that was, she said, I think the context for that budget was wholly unique, wasn't it? The pandemic was starting to bear down, and it would have been appropriate, I think, to trust and have confidence that officials within local government could have held private and confidential information, could have been invited into a safe space to do the design. I think it was an error that we weren't. But that was her perspective. You've just told us that you knew about the budget just the day before. So I suppose you might say, well, as a cabinet minister, I didn't find out any earlier. Is that just government business as usual, or is it a reflection of just the speed at which all this was happening?
I think, to be fair to the Treasury, I think it is a reflection of the speed at which things were going. In normal times, you may be, as a department, discussing a policy that is going to be announced at the budget, so you would probably have a pretty good idea. You may not have the full parameters, particularly in terms of the value of the intervention of that policy until it basically is announced by the Chancellor. So I do think in this case it was just, frankly, as Joanna Killian said, this was just a unique set of circumstances. The point, though, I think, is what we learn from this. One, that actually where you can, you bring in other parts of government earlier into decisions on policies, but also you have this suite of products available which have been sort of pre-tested and pre-worked with all the key parties.
If we moved forward to the Cohort 2 scheme, so we're not here in the territory of budget PERDA, and we're not. Yes, there's still urgency, but we're not in the early days of the pandemic when things were literally developing hour by hour. Again, Joanna Killian's evidence was that the Local Government Association and local authorities were also not consulted in the design of the local restriction support grant in particular, which was a cohort 2 scheme. And I just wonder, do you accept that? And if so, how that came about, that they weren't brought into that design?
I can't, sitting here, sort of recall exactly how all of that stuff was designed. But I mean, if she says that they weren't part of it, then clearly that's a learning for the future.
Okay. So, and we want to look ahead and be constructive, obviously. I suppose the question really is, are there any good reasons not to include local authorities in the design of schemes that they're going to have to deliver?
I think there is every good reason to involve them. I think the reason that didn't happen at that time is because of the time constraints. And as I said, in normal times, they would be involved. And clearly going forward, we need to make sure that when we're planning for these, not just the local authorities, but in other schemes, you have other parts of government which are involved early on.
We know from evidence the inquiries received that sometimes announcements about schemes were made centrally before local authorities who were meant to be delivering them had actually been informed about them or had any time to prepare. I mean, that's obviously suboptimal from their perspective, but why was that happening?
I think it also comes down to the sort of timelines, because obviously some of the schemes that came forward in cohort 2 related to dealing with businesses that were in areas that were facing local lockdowns, for instance. That is something that developed, and the interventions then developed, effectively in real time. I think that is kind of the mitigating reason why they weren't involved. But as I said, this inquiry is obviously very much about learning lessons for the future, and so that's one of the ones that we definitely need to learn. Get them involved early on in the sort of interventions that you might want to make.
Similar point, really. I just want your view about this, please. It's also been said by a number of witnesses and other evidence the inquiry has seen that sometimes you'd have a public announcement of a scheme, but the guidance by which the scheme was then to be administered came sometimes quite a long time afterwards. So there's a public expectation or a business expectation of support because the scheme's been announced, but the local authority that's actually got to deal with it doesn't have the guidance by which to administer it.
Yeah. So, if I may, just sort of focusing a little bit on the cohort 1 grants. So certainly the guidance that was sent to local authorities in relation to the small business grant fund and the hospitality leisure fund, I actually wrote a letter on the 23rd of March to all the local authorities, enclosing the guidance. They received their money right at the start of April. So there was a period of days in which that guidance was in place, and we as a department did hold teleconferences with all the local authorities on the 23rd and then sort of for the days that followed, trying to answer their questions. I accept that in the case of the discretionary grant fund, there was a period of days between sort of the whole thing being sort of live and the guidance going out. And again, I think that's something that we need to learn from.
Okay. I mean, ideally, it's difficult to see there'd be an advantage to guidance not coming out when the scheme is announced, but I know we weren't in ideal circumstances, but generally speaking, if there's time now to work these things up, that would be desirable, wouldn't it?
Yes, absolutely.
Right. Can I just pick up another point that emerges from the corporate statement of your department? And I just would like your view about this. It's sort of looking back on the whole piece of grants across 3 cohorts. And the department's statement says that it resulted in a complex web of grant support that was sometimes too vague and ambitious in its terms. And it picks up this point about guidance, and sometimes it was unclear. Now, accepting you'd left by the time of the 3rd cohort, and the situation was developing. If we were back in this situation again, and you've talked about looking ahead and planning ahead, the suggestion in the corporate statement is there should be a much simpler, much more streamlined system of grants with clear guidance, and everyone knows where they stand, and these are the things you stand up. Where does that, as a suggestion, sit with you?
Look, I think it's difficult for anyone to logically argue against that. I mean, the more schemes you have in any kind of sort of situation, the more complex it is, the more difficult it is for people who are administering to understand it. So, yes, I think simpler, fewer, but with the ability to tweak some of those schemes depending on what is happening in terms of a future emergency.
Thank you. Another discrete issue related to local authorities, please. The league table, as it's been described, relating to essentially how much money the local authorities were getting out. I'm just going to recap a bit of evidence the inquiry has heard and then ask for your view. Joanna Killian, Chief Executive of the Local Government Association, I think our view was it was a really unhelpful and sort of undermining process. I think there are a number of reasons why the performance in delivering grants varied. The economies were different, schemes were different in different areas at some points. I think it put unnecessary pressure into councils who felt they had to respond to the league table. Alison Greenhill, Chief Operating Officer of Leicestershire City Council, told the inquiry, "I see absolutely no benefit in publishing these tables, and I struggle now still to see the benefit in publishing a league table. For whose benefit?" And we also heard this morning from Mr. Cheeseman, the Public Sector Fraud Authority head, who also had concerns about league tables, because his view was the risk was it really put pressure on authorities to get money out of the door rather than thinking about fraud and protecting public money. Now, I know that the intention was not to establish this as a sort of league table that was just rating speed, but that was how it was interpreted, and it seems, and very often that things develop a life of their own. Reflecting and looking back, I know in your statement you stood by the idea of the table, but you've now heard the reflections of local authorities and Mr. Cheeseman. Where does it sit with you now in terms of whether that was or was not a good move, or more importantly, going forwards?
Yeah.
Is it the sort of thing that we should be concerned with?
Yeah. So I think, firstly, as you say, our intention was that this shouldn't be seen as a league table. In fact, the way it was presented was alphabetically. We took away, the percentages of money allocated and actually sent to the local authorities. I accept that some people would still have seen these as league tables. I also accept that perhaps what we should have done is had some notes attached to the information that was published, talking about, in general terms, why there might be variations in the money that went out. However, Mr. Wright, this is public money. This is billions and billions of pounds. And at the end of the day, there was huge public interest in this from businesses, from business representative organisations, from members of Parliament. Now, as well as being the business secretary, for 14 years I was also the Member of Parliament for Reading West. That covers an area where there are 2 local authorities. As a local Member of Parliament, and because I was the business secretary, I was getting perhaps an oversized number of emails about help for businesses. But just as a local Member of Parliament, I was keen to understand what was going out in my patch and how I should try and help businesses in my patch. And that's the same for all the 650 members of Parliament. So I think, frankly, I don't think it's realistic to suggest that we shouldn't publish this kind of information. I think, practically, politically, for all sorts of reasons, this is information that you need to publish. But as I said, I accept that we could have explained better the variations. But the money went to the local authorities at the beginning of April. I held a call on the 15th of April with the local authorities, the senior folks in the local authorities. And at that point, there were some local authorities that had put out 75% of their allocation, some below 30%, and some hadn't even sent us a return of how much money they had put out. And I just think that's something to sort of, bear in mind as well, is, why, yet, of course, there are local reasons why there's a variation, but that's a pretty big variation. And the other thing that we did do was to hold calls with local authorities so that people could learn from best practice what was going on in one area, where they were doing things and getting money out of the door, and in places that they weren't. Now, I spoke about my colleague, Paul Scully. I mean, one of the things that he found in all the calls that he made was that there was a certain amount of sort of reluctance about putting money out faster from some of the local authorities. They were concerned about if there was an error, who would stand behind this. And I wrote a letter to every local authority saying, if you have made a payment in good faith, then absolutely we will stand behind that. And just the final point on this is you talked about checks. When we gathered these 20 local authorities, one of the questions that we asked before we put out guidance, again, because we knew there was a risk that there may be erroneous payments, we asked them, how long will it take to put in place prepayment checks? And the answer was 4 to 6 weeks. We couldn't wait 4 to 6 weeks. And in fact, some of those local authorities who were basically ready to put money out of the door said to us, yep, we're ready. Let's get on and do this. And that's why we focused on post-payment assurance. So just in summary terms, I accept some of the points that have been raised about these league tables. We should have explained them better and all the rest of it. But I don't think it's realistic, particularly when you're dealing with billions of pounds of public money, to say that there shouldn't be transparency on money that is going out of the door.
Yeah. I mean, do you think it may be that, in part, hurt may be the right word that local authority leaders feel about this is because, A, they weren't being consulted on scheme design, B, they weren't getting guidance when the schemes were announced, and C, they were then being judged, they thought unfairly, in terms of how quickly they were getting money out. So if you put it all together, you can perhaps understand why they might feel they're a little bit let down by
No,
central government.
I'm sort of sympathetic, I think, certainly to some of the points that have been made. But ultimately, I just go back to this point about why we were doing this and why we were doing it at pace. And it was to support businesses in their areas. And I think that's understood. I think even in, I may be sort of misremembering, but I think in Mr. Cheeseman's statement, there is a point there about an understanding that this was ultimately getting money out of the door to help businesses. And I think that's the mindset that we had in terms of why we were doing this quickly.
Right. Thank you very much. Well, those are the areas that I wanted to cover in the time we have. There is a little time, 2 or 3 minutes, before I hand over to core participants to ask you whether, other than the points to the future you've made, so you've made the point about having a panel that would meet regularly and retain that sort of corporate memory and learning, and off-the-shelf schemes that can be tried and tested, and these countermeasures baked in at this stage. Are there any other reflections you have that you would like to share for how, in a future emergency, the department could be better prepared?
Yes. So, I mean, I think four, and you've already sort of talked about a number of them. So first is this sort of governance framework, some high-level principles on how you work together. But that should reflect that you need to take into account, how you deal with vulnerable groups and sort of, businesses and all the rest of it. And obviously how you work within government itself. The second, exactly as you've said and others have said, this sort of suite of products that you keep testing. Thirdly, I think a standing panel, it's something that, my lady, I also suggested during the vaccines module. I think that would be really important, and to keep that live and sort of, continuing to horizon scan. And I think the fourth piece of this is around data. So I think one of the things that I think we all felt was that, particularly when you're trying to make value for money assessments on schemes, I mean, we need to be thinking about the sort of data that we can rely on for that. In terms of local authorities, yes, I think particularly in terms of cohort one, there was, I think, about £945 million that was sort of paid out in sort of, erroneous payments, and that's because the data wasn't up to date in terms of the businesses that could potentially get the support. That is the sort of thing, practical thing, that we ought to be doing now to make sure that our data sets are up to date so we can apply them in an emergency, because at that point, it's too late. You need to have this in place now.
Thank you very much. My lady, those are my questions. I think there are some approved Rule 10 questions.
They're answered right. Thank you very much. Miss Hannett, I think you're up first.
Thank you, my lady. Lord Sharma, I appear on behalf of the long COVID groups. Given that long COVID has given rise to workplace absences and consequential adverse impacts on businesses, would you recommend that consideration is given now to how to monitor the long-term sequelae of a virus in a future pandemic?
Yes. I mean, the simple answer is yes, I agree. And I'm, of course, very sympathetic to anyone who is suffering from long COVID. I think that is a piece of work that we should be looking at, whilst bearing in mind that the next emergency, may not be a COVID-like virus. There may be something else that comes down the line, but I'm pretty sure that whatever the outcome of that work is, it will help in terms of dealing with the outcomes of a future emergency.
And one follow-up, if I may, my lady. Would you accept that this could sensibly form part of the remit of the standing panel that you recommend?
Potentially, if you had the right expertise. I guess from my point of view, I think what I would like in terms of standing panel is something that's sort of relatively nimble. But I could see this being a discrete piece of work that's done, which feeds into the panel, rather than, because I think that's what we are sort of talking about here, rather than it's having this as part of the panel itself. From my perspective, I think the panel is more about the interventions that need to be made from a sort of financial business perspective.
Thank you, Lord Sharma. Thank you, my lady.
Thank you, Miss Hannett. Miss Peacock, I think you're next.
Thank you, my lady. Good afternoon. I ask questions on behalf of the Trades Union Congress. One of the lessons learned which you've discussed in detail today in your evidence, and we've just touched upon now, is the need for the standing panel. I should say that the TUC sees significant value in a standing panel of this kind. You've stated that the overall aim would be to develop a package of financial interventions to be available for deployment in future, and that the panel's membership would benefit from a mix of individuals, including former ministers and officials, and the business representative organisations. The TUC has raised a similar suggestion in this module, that there should be a panel made up of individuals from government, from businesses and from organisations representing the workforce, tasked with considering possible economic interventions in advance of a future crisis. And the TUC's focus, as you might expect, is the labour market interventions, such as the furlough scheme and the self-employed income support scheme. The focus of your evidence naturally today has been upon support for businesses in the form of loans and grants. but would you agree that a panel to consider the economic response should include membership from all key economic actors, including those representing workers as well as businesses?
Thank you for that question. Actually, just to say that I think my business department, and on a personal level, I worked very closely with Frances O'Grady when she was Secretary General, and Paul Novak, who was her deputy at the time. And we worked very closely on the workplace guidance. And there was a shared view. I mean, we were working together to make sure that we kept people safe. So in that sense, I think having representatives from sort of employers as part of a standing panel, I personally think that probably is a good idea.
Representative employers, yes, but in terms of representatives of the workforce.
Yes, sorry, workforce. Sorry, yes.
I'm grateful, and just to expand upon that, given what you've said about the benefits of having the business representative organisations on such a panel, would you then agree that having workforce representative organisations on the panel would enable it to benefit from yet a wider pool of expertise, resource, and on-the-ground intelligence?
Potentially, yes. Again, I think from my point of view, what I wouldn't want is for this panel to be, frankly, comprised of too many sort of individuals. I mean, those are individuals who could represent certain groups. That's absolutely fine. But the whole point of this panel should be it's something that's sort of nimble, that can act quickly, and doesn't kind of become another committee of government where people go through the motions of attending without actually anything concrete coming out of it.
I'm grateful. Those are my questions.
Thank you.
Thank you, Ms. Peacock. And lastly, Ms. Beattie.
I ask questions on behalf of national disabled people's organisations, being organisations that are majority-led, directed, staffed and governed by disabled people. And my questions concern the Future Fund, supported businesses. You refer in your statement to equality characteristics of Future Fund supported businesses in terms of gender and ethnicity. Mm-hmm. Did you receive analysis concerning disability characteristics of Future Fund supported businesses?
That's a very good question. I don't want to sort of say the wrong thing, but I don't think at the time we got that. I think looking forward, yes, that absolutely is a characteristic that we should have in mind as well. And I think I just say a little bit more on this because I think, sometimes on schemes, I think particularly on the grant scheme, we didn't get the impact assessments done as quickly as we should have done. And again, I think that is a learning that you can put in place now in relation to any future schemes that we plan for as well.
Thank you. And so that covers equality impact assessments when setting up the scheme, but in terms of actually who's getting the money,
yes,
no, where those grants are going to, is it right that there was no reason that data on disability breakdown of those recipients couldn't have been obtained, and in fact there was a plan to monitor for that diversity across equality characteristics to ensure that that fund was equitably distributed, and yet we don't see disability data coming out of that?
No, and I understand that, and I think that is probably a sort of a failing. I think we were very clear that, particularly with that kind of intervention, I mean, generally it goes to the Southeast, it goes to organisations made up of able men, if I can put it like that, and that's why we were keen to make sure that the distributions was wider, and clearly in some measures we did achieve more equitability in terms of gender and ethnicity. But I think you're right. We should have looked more closely at disabilities as well.
Thank you, Lord Chalmers. And my lady, I think Mr. Wright has covered business grant schemes. Thank you.
Lord Chalmers, that completes our questioning of you today, and I think it's the end of the demands that the inquiry has been making on you. So I'm genuinely grateful for the help you've given, not only in this module but previous modules. obviously will bear very much in mind not only your oral evidence but the witness statements too. So thank you for coming to help us again.
Thank you, my lady, and thank you for the very courteous exchanges that I've had.
Very well, Mr. Wright, I think that completes the business for today.
It does, my lady. Thank you very much.
Very well, I shall return at 10 o'clock tomorrow. Thank you.